lovely. Let's get started. Thanks so much for coming back. We have a lively afternoon ahead of us, and I hope you've had a good lunch, and that's not seeing anybody in buddies. I think it's worth paying attention for the next few hours, as we said. So, if the morning was about figures and analysis and so on, I think we have more of a debate now what to do with all that information. We're going to start off with another set of presentations. We will start with Robert Madelin, who I think everyone knows, the Director General at Telecommunication, famously. We'll then have Bernd Maurer, Deputy Head of Department of Raiffeisen Bank, followed by Georg, the Head of the Austrian Regulator, and Vice Chair Bernd, the Championship last year. And then we'll have Sverre Holt-Francati from Centrobank. Robert Madelin, do you want to start off?
Firstly, ladies and gentlemen, I fear that the vagaries of air travel meant that I missed most of this morning's presentation, but I understand that a lot of the content of the proposal on the table in Brussels and Strasbourg is well known to you as individuals and has been crawled over a bit this morning. So I will go through some of the slides rather quickly, but I want to send the message that firstly the European Commission believes that this is a life-critical issue for a successful, thriving, future European economy in the global internet world. So there is no question but that the European Council was right to discuss digital issues twice this year, having got through the Euro crisis. And secondly, whatever proposal on the table, whatever issue we're looking at in a conference such as this, is only part of the problem. So probably it's not so easy to digest this slide, but you can study it afterwards, and it's pretty incomplete. But this is the tip of an iceberg, and it's a pyramid shape. Everything in the pyramid is, if you like, to do with the current regulatory framework. So I would buy all of those this morning, which was their premise that adjusting the regulatory framework can be a key enabler for new investment. Within that, some of what we're doing in the Connected Continent proposal will affect that framework, and so will the very important transversal purple and green stripe there, the discussions on relevant markets, where we hope before a new President of the Commission is designated next summer, also to have achieved, with the help of BEREC and our stakeholders, a revision and updating and modernisation of the definition of relevant markets. But the tip of the iceberg is only part of the iceberg, and while the iceberg floats in water, there's also the rest of the environment. So you have other issues like big data, data protection, the Connecting Europe facility out there, and those are only some of the drivers that you can see. Just to illustrate why that matters, and I didn't just take words at random out of the policy pipeline, it is a fact in Europe today that when companies like Rovio or the media companies, Reed Elsevier or Border, ask themselves, what does the future hold? Two things happen. The first is that big data changing our business models is the answer. So that's important for us to understand, well, what's it got to do with telecoms? But the second thing they notice then is we need bigger, fatter pipes everywhere if potential future business models are to be possible. And this is not to disagree with what Ed Richards said this morning. Not all digital business models require ever higher speeds, and definitely they don't necessarily require FTTH. This can also be a perception about the quality and resilience of trans-European backbone networks, whether it's east-west in the Mediterranean or north-south across the Baltic. And then underneath the water, what's the stuff that actually affects investors as well, which we shouldn't forget? The investment climate in every country in Europe. Are my assets safe? Is the law secure? Is the government transparent? Is the regulator independent? So when we talk about our little world of the Connected Continent, it will be dominated many times over by all of those other considerations. And there's one final point I'd like to make on the context, which is a number, which I discovered somewhat to my shame as a British citizen in the plane from London to Budapest this morning. Last year, my fellow subjects in the UK spent £46 billion, or let's say 50 billion euros plus, on gambling online. So the European Parliament says, no, we're not going to spend 6 billion over 7 years investing in high speed. And in a time of poverty and austerity, tens of billions of euros are being thrown away by our societies every year. So if we could correctly identify the opportunities for sustainable investment, we would also need to change a little bit, not just market sentiment, but also values in our societies. And then this is still a big, rich continent with a relatively good investment regime, and things would come right. So let's not forget the big picture just because the little picture is exciting. The growth and jobs stuff I've told you about, and you've heard about it, and you've read about it. I don't think that this is just about my current boss. It's also about the member states, as the European Council has shown. It's also about all of you and your organisations. And I think that beyond the European Parliament elections, these issues will remain key. In the package, we want to do some short-term things that we think can help. And British understatement being a good thing, I think that these are some things that could help. We think that it is doable and desirable and urgent, but we're not, as my pyramid is designed to illustrate, saying that if you do this you will certainly get nirvana, or if you don't do this you will definitely starve. We do, however, think that more market integration, more focus on particularly barriers in the spectrum and the small cell field, more work on competition principles and the open internet, and some governance changes will together help to kick the sector in the right direction. So that's our proposition. And I sometimes feel, even if I missed some of the discussions this morning, that the proposition is taken to be much more deterministic and is then challenged because, of course, it shouldn't be deterministic. But if you take it on the grounds it is made, I personally believe, although we'll hear the answers in the conversation, that it's an unanswerable case. If the feeling, on the other hand, were, let's look at the counterfactual is we'll wait for market sentiments and the broad context to drive money towards this sector in competition with all others. I don't believe that that will do the trick. So consumers might spend more on broadband if they had better rights, easier switching, finally a regulated deal on the net neutrality principles we've talked about for the last 3 years, and a clear date to phase out roaming. That's the market sentiment part. The single EU authorization, which has been perhaps the most controversial, because it looks like things are being sucked up towards Brussels. The aloof and arrogant place, as one of my old college friends, who's now British Minister, said on Monday. That's not what it's about. The single EU authorization is a single authorization for the EU market, but it's going to be managed by a networked intelligence called the NRAs. It is a genuinely innovative proposal in terms of how you manage the governance of markets in as diverse a place as Europe. It's not suck it all up to Brussels. It's not leave a sort of bowl of spaghetti with meatballs that you call coordinated regulation and hope that it works. It's an attempt to find a third way. I heard that the third way is popular this morning. And finally, as I've said already, we believe that both on wireless and on fixed, we can edge towards and favour new business models with a few tweaks to the regulatory machine. This is the point I've made already, that we need a balance. We don't believe that you will get to a single market in a very purist sense in this sector any more than we've achieved it in very many others. We do, however, think that we can move towards a more coordinated use of local knowledge and a reduction of the current regulatory costs, which are exactly proportionate to the number of member states in which an operator wants to operate. That shouldn't be the case. The minimum for a single market is that you don't face proportionate different costs every time you want to cross a national border. Legal certainty, we talked about a bit this morning. The pro-competitive elements are the most challenging, of course, because if they are genuinely pro-competitive, then there are people who hold the rents at the moment or are comfortable with the status quo who will hotly oppose them. So I think it's a preliminary proof of concept that this part of the package has proved so controversial. That means that we're at least raising the right issues. And I think that the removal of current barriers to entry across the EU can be important. I think that the virtual access products are an issue we've been talking about since I took this job over 3 years ago. We need to make more progress to actually stand them up. And Wi-Fi networks and the small cells we've also been talking about for at least 3 years as a regulatory issue. We haven't got it right yet. On roaming, I think we see, since the proposal was adopted, a very interesting legislative dynamic. Here we are conducting an analysis among stakeholders while the co-deciders in the Parliament and Council get on with their work. The fact that the Parliament has fully engaged with the urgency suggested by the European Council and the Commission means that, in effect, the rapporteurs in the Parliament are running the process at the moment. The lead forum for exploring these issues, including roaming, is the Parliament, and as far as I can see, will continue to be, unless we find more bandwidth in terms of meeting time for working groups among the member state experts. As far as regulatory expertise is concerned, I think the fact that also next week the senior members of the NRAs and my colleagues will be sitting together on some of the more controversial issues will continue to draw the expertise out of the regulatory network and into the legislative debate. But whether or not we actually get to a strike point in the course of 2014 now depends crucially not on the Parliament, which I think is doing its job and can adopt texts at the plenary in April before they go to elections, and then we'll have a mandate to negotiate on them even afterwards if it's necessary, but rather on the ability of the outgoing and next presidencies to bring together the member state positions fast enough. I think, Chairman, I would leave it there. The only other point I would make is investors' reactions. I used to think investors were better than economists in the sense that you didn't need to cut off one of their hands. You always got a straight answer. You certainly get a much clearer answer, but when you look at the sum total, the opinions of investors differ almost as much as those of economists. And I think, as I said, that the issue that we're facing there is we're trying to judge whether investors like a legislative package, rather than doing what investors often do, if I understand correctly, which is to look not just at a potential change in the regulatory package, but also at all the parts of the regulation that won't change, the broader climate for business, and the alternative targets for investment this quarter. So I think that in judging investors' reactions, I stayed with the figure that it was 85% positive and 15% unsure when we launched the proposal. Since then, investors talk to people who have stakes in the game and get lots of more colourful inputs. I'm not sure whether that 85 to 15 number has actually moved in the course of the last few weeks. But I think however well we do in adopting this package, the key will be not only to adopt the package, which will bring these good things, but also to continue to run the rest of the regulatory pyramid well and to pay sufficient attention to getting the rest of the climate for business right. I think that the rest of the slides either go through what you've seen already or what you know already, but they're there for you to study, and I'm happy to take other questions during the debate. Thank you very much.
Thank you, Robert, and excellent time cooking as well, which I certainly appreciate. We're going to carry on through the presentations. So next up is Bernd Maurer. Raiffeisen.
First, say good afternoon. Thanks for the invitation. I'm happy to be here. What I'm doing, I'm one more of those equity guys. I cover and coordinate Austrian and Central and Eastern European telecommunication coverage at Raiffeisen. We have a focus on Austria and Central and Eastern Europe as well as Russia. But what I have to admit is that listening here in the morning to the detailed presentations of my colleagues from SocGen and HSBC, like some very clear points and some very clear words describing the picture of the European telecommunication industry and the perception of investors. However, I have to admit that we see the glass a bit more half full, I would say, and that a bit more positive tone on the whole industry, or at least there is some hope for the industry, I would say, in our view. This way? Yes. I was asked from the organization to focus on the 4 questions you see on this slide. First is how to increase competitiveness of the European telecommunication industry. Second comes first. How to bring back investor attention to telecommunication shares, to the telecom market. Third, what about the regulation? What can the regulation do to support the industry? And fourth, but last but not least, our thoughts on the current draft of the agenda of the European Union. I will not spend much time on question 1, how to increase competitiveness of the telecommunication industry in Europe, as it's our opinion that we first see the European telecommunication industry still competitive, and the future development of competitiveness of the telecommunication industry I see rather as a consequence on the answers on the following 3 questions. Before starting with our thoughts on the regulation and our takeaways from investor meetings, I want to repeat very briefly, but want to highlight some, I would say, the dilemma currently in the industry and presenting here at the regulatory conference and bring some additional views. It's on the slide where the text is, it's Telecom Austria shown, but you see all the RSC incumbents like TPSA from Poland, Telekom the Czech Republic, Hrvatski Telekom from Croatia, and Magyar Telekom here from Hungary. They all 3 or they all 5 show the same picture, and that's the dilemma we are currently in. The big bars are sales figures, falling since 2007. The smaller bars, light blue color, operating profit, EBITDA figures, adjusted here in this case, also falling. And below the x-axis, you have CapEx, also lower. And that's not something which especially regulatory bodies want. Regulatory bodies try to force, I would say, to reach the goals set in the Agenda 2020 of the European Union, of the legislative authorities. And CapEx should increase, but in the environment we are currently in, it's difficult, rather impossible, that operators again invest more capital in the industry. We have, since 2009, on average in Austria and Central Eastern European countries, a 21% cut of CapEx budgets, which is a clear consequence of the operating environment. We see here the figures, sales are down 13% on average, EBITDA down 17%. There was and is a need to react from the operators to focus on cash flow generation. And how they did it and how they will do it in the short term is to cut dividends, not well received by investors, and to cut CapEx, also in the long term, not that well received. And the situation we are in is a consequence of 3 things in our view. Cyclical weakening. Okay, this happened. It's not the fault of the telecommunication industry. It's not the fault of legislative authorities, and also it's not the fault of regulators. But what exactly set in the crisis years, speaking of 2009, 2010, was the harsh regulatory measures hurting the industry, speaking of cut-off termination rates, speaking of first changes on roaming rates, exactly set in this period of time. And of course, it's a goal of legislative authorities and regulators, increased competition. And all those three things taken together had the consequence that the European telecommunication industry did not turn out as defensive as capital market participants expected in 2009 and 2010. Coming to question number one, where I will spend a bit more time, but I should stay in the time frame set. I said before, we see the investor perception clearly brightening in the last couple of months. We would say that, as the question was how to bring back investor interest in the European telecommunication industry, I would say that investor attention is already there. Not that big as it was in the boom times of the sector, but the turning point, from my point of view, is behind us, and you can see it in the following chart. This is 2007. We started in 2007, and here, that's the multi-year low of the broad Stocks 600 telecommunication index, rising by 30% since the summer month. And was also coming as a clear presented as a clear picture in the presentations in the morning. Here in 2009, overall equity markets reached their low, or the broad market reached its low. It was has risen by more than 100% since spring of 2009. Telecommunication shares went down a further 35%, reflecting all the negatives which occurred in the industry. But what I want to make my point is that there was some brightening in recent months, in recent weeks, and recent months. I want to say a bit more to the yes, here it is again. Those were three things, from my point of view, responsible therefore. We saw a shake-up of some markets. You had the entrance of new strategic investors. KPN, America Mobile stepping in the Netherlands, buying a stake in KPN. America Mobile stepping in Austria, buying a stake in Telecom Austria. You saw market exits of Telefonica and other players. You saw market consolidation in Austria and in other markets. So that's some things which were awaited by capital market participants happened in the last couple of months. The second thing is that also the economic outlook is expected to brighten, or at least to stabilize and to recover slowly. And as I said before, that in 2009, equity investors get burned flying to the so-called defensive sector, which didn't turn out to be that defensive as it used to be in the past. There is also the perception now in the market that the former defensive telecommunication industry could perhaps a bit more profit from a cyclical recovery. Sorry, it's the wrong slide now. Can we go 2 slides back, please, if you have it? Yes, thanks a lot, that's it. I mentioned intra-market consolidation. I mentioned new strategic investors which were stepping in some markets. I mentioned the expected recovery of the European economy. But what I also have to state, and that's very important, I'm presenting here today, is that also the let's say, first draft of the new European Union directive for the telecommunication industry was at least a bit better than feared from a capital markets perspective. And those points taken together brought a relief. And speaking also from covering Telecom Austria, you could expect in some markets a kind of stabilization, that with a bit of optimism you can say that hard-hit markets, that the worst probably is behind us. That it will be a long and winding road to come really to a stabilization of operating profit figures or the top line. But at least the worst declines should be behind us. And that's also a point when being on the road, meeting investors, meeting our clients. There is a clear differentiation between the different markets. There is, especially the interest in the telecommunication industry came back to markets where there is significant potential for market repair, meaning markets where market consolidation happened, meaning that price competition slowed perhaps down a bit, meaning that spectrum auction is either happened or is not to be expected to be a big burden. Those markets are, from our point of view, again in focus of investors. Markets, on the other hand, where the entry of a fourth operator is looming, where the risk of high spending in spectrum auctions, where still high increase in price competition, those markets are still not in the focus of investors. So what I want to say here is that in the recent month we saw a return of interest of investors in the telecom industry, but a very selective one. It's not the whole sector which is in focus again. It's selective markets where investors expect or see at least recovery potential. And one thing, and that was a colleague from HSBC saying in the morning very clearly, as long as telecom operators are an investment where it's only about limiting declines at the top line or at the EBITDA, they are no sexy investment target. Telecom operators need, and that's also something where, from my point of view, regulators especially have to address on this topic, is telecom companies need to be able to address new sources of business. What I mean is there's big potential in the industry where we think we all will use a SIM card in 3, 4, 5 years' time. Thinking of all the topics like smart home, transportation, logistics, all the music industry. Here it's telecom operators simply need to, they lost a lot of ARPU in the last years, and from the original voice and data business, it will so go on for the next couple of years. But the operators need to get the chance to make up for the lost revenues in the last years. And getting the one or the other euro back from new clients, new customers, from new sources of businesses. That's where this sector can again be a growth industry, but that's something for the legislative authorities to allow telecom companies again to earn money. Hope I press the right button now. Now, what else can regulation do to support the industry? First, and this I clearly have to say that European telecommunication regulation had very big benefits for consumers. Think back on the price you paid for your first mobile minute you talked to in the end of the 90s. Look how cheap data prices are. So look at how strongly the service level increased in the last 10 to 15 years. So there were really big benefits from the current setup of European Union telecom regulation. However, the problems the industry is in now are also a consequence of regulation. Meaning, especially in the last years, termination rates, roaming glide paths. That's something which went very fast and had drastic consequences, leading to falling margins in the industry, and in the end leading to falling investments, which no one wants to see. It's against politicians. They want to reach the goal set in their Agenda 2020, and it's also against the industry. They want to grow, but currently they have to preserve cash flow. So investments are needed. We heard in the morning, otherwise Europe is falling back. I do not want to elaborate on this. And a way has to be found to support investment and to protect the consumer on the other side. There need to be found a way in the middle. Otherwise it will hurt either the one or the other. It's a kind of a give and take attitude that we put on the slide. Yeah? There need to be a stimulus of investment. If it's fiber or not, I do not care so much, but investments cannot fall by another 20–30%. Then we will have significant problems in the industry. I bring some thoughts on the table with the, yes, some thoughts how some things I put on this slide are a kind of dreams and cannot happen in this way. But I'm working in a country which had a spectrum auction where 3 operators are now paying 2 billion. Whoever, whatever the reason is therefore. But if politicians, the legislative authorities, and I always mean legislative authorities and not national regulators, because national regulators work in a framework which is set by the legislative authorities. If they put the money where their mouth is and speaking about Agenda 2020, then ways should be found to allocate spectrum quite cheaply. With the obligation to that the rollout has to be completed by a certain degree of percentage points in the next 2 to 3 years. But if politicians really want to support the industry, then that's something I think I'm sure they can be found a solution. Other things are further deregulation. Colleagues here presented thoughts on deregulation of fixed line wholesale, for example. That's one point. Wherever asymmetric termination rates are in place is a second point. In some markets it's perhaps important to, or would be beneficial to include cable companies in the regulation. Over-the-top players, it's the most important thing for the industry, perhaps having now a bit of a competitive advantage from my point of view. And we have to make sure, as I said before, that telecom operators are allowed to earn or to have additional sources of revenues. That's, yeah, perhaps one thing I want to highlight here from this, and then I'm finishing in a couple of seconds. May I come back once? Yeah. Also, no political surprises. On the one hand, speak of telecommunication taxes, and also on the other hand, a long regulatory framework that if MTR rates, we need, from my point of view, longer glide path for termination rates, longer glide path for roaming, that the industry really can calculate their return on investment. And that's what is on my last slide, that for all bodies who want to see telecom operators investing, those bodies have to allow the telecom operators earn a return on their investments and can calculate this return on investment in a stable regulatory environment and also in a stable political environment which is affecting the regulatory one. One sentence, as I was asked to present my thought on the current proposal of the European Community, I would say It's a proper negotiating base for further discussion. There is, of course, being in the framework of operator, consumer protection, and governments. It will never fit the need of all of them, but I think it's the first step in the right direction. You see on the slide what I highlight positive, where it's our opinion that something has to be changed, but yeah, all the time frames that I stop at this point to say thank you for your attention.
Thank you, friends. Thank you very much. We'll move on to Georg, Serentschy, speaking in Austria. Yes.
Good afternoon. I think we all got a very interesting task provided by the organizers. And this is, we I think collectively in search of a magic formula, kind of silver bullet, how to get Europe back on track. So my answer to this question is the virtuous circle. How can new regulations, innovation and investment bring Europe back to the top? Let me first start with a couple of informations where Europe stands now. And this is from a slightly different angle compared to the information we got today. What I've done here is I've put together a couple of informations from the Network Readiness Index. And I've shown this in these columns. You see the Network Readiness Index in total, the political environment, the innovation environment, the infrastructure, and the internet usage, and compare this, the relevant leading country, the United States, the Asian tigers, and the average of the EU 28. And what we can see here, and this graph shows it very clearly, in total and also with the sub-indices, we've measured the individual readiness for countries to exploit the opportunities offered by the information and communications technology. And what we see here is that Europe, there is room to catch up against the world leaders in the areas such as infrastructure, the political environment, and innovation. We are also behind the internet usage, which will be the basis for our future economic development. There is only one thing which Europe is well off, and that's the infrastructure. So the infrastructure is much better than many people think. Getting to the next slide. The main problem is that we currently stuck in Europe in our orthodoxy. And when I say we, I mean it's on all sides, regulators, policymakers, on the telecom sector. And if you want to change, then change is hard to achieve. And the quote I have brought with me to show you is a quote from Machiavelli. It's about 500 years old. And it shows that things have not changed very much. There is nothing more difficult to plan, more doubtful of success, more dangerous to manage than the creation of a new system. Because the innovator has the enmity of all who profit by the preservation of the old system, and only lukewarm defenders by those who would gain by the new system. So it's interesting, 500 years old, but still true. So I believe that it's not sufficient to consider changes in only one policy area, such as regulation. I think a regulation has been quoted a couple of times today. I think it is necessary, but it is not sufficient to stay insist on changes in the regulatory environment. So there is no single magic, no silver bullet that solves all our problems and brings investment back to Europe. I think that we will rather need to shape our policies in several areas that I believe are key puzzle stones as shown here. So it's this kind of triangle between investment, innovation, and regulation. And finally, and up and foremost, also industrial policy. I think we are lacking dramatically industrial policy in Europe. In my book that I published in September, I argued that new approaches in these three areas may trigger and should trigger a virtuous circle which enables Europe to catch up against the top ICT regions in the world. Internet usage, ladies and gentlemen, is key for investment incentives, as there is no business case for new investments in infrastructure without paying customers, without customers which are willing to pay a premium for better services. And the demand side is a very, very much underestimated field in that equation. Therefore, in my view, the virtuous circle innovation policies play an important role as they can ease the launch of new services together, and that's a very important message in this room, with regulatory policies and practices that are more focused to end users. This may drive usage and customers' willingness to pay, which ultimately should lead to higher investment incentives. At the same time, investment policy need to ensure that investment in new infrastructure is carried out in an efficient manner. Sector-specific regulation should therefore be designed in such a way that investment incentives for the firms are disturbed as minimal as possible. With more investment and correspondingly increased bandwidth, we will see new services that need even higher bandwidth, which again should induce higher usage, revenues, and again investment. Therefore, the virtuous circle starts all over again by unleashing even more investment and incentives for innovation. Now, for each of these areas, we need to implement key suggestions to launch the virtuous circle. Regarding regulation, we need a more flexible environment with some basic principles. We should focus on dynamic efficiency and platform competition between different platforms, meaning copper, fiber, cable, and mobile, to ensure an efficient investment. This was, by the way, mentioned today morning as well, the focus on dynamic efficiency, and unfortunately many regulatory practices are still stuck in the way of focusing on static efficiency. In some areas, regulation is just too overburdened today. For instance, the NGA recommendation, which I like to call a masterpiece of regulatory micromanagement, provides very detailed specifications of how to regulate fiber access markets, which leaves no room for national specifics. The same is true for the appendix of the telecom single market draft regulation regarding the virtual access product. We should get rid of such regulatory micromanagement instead of specifying even more details. Finally, we need a more user-centric approach. The demand side is extremely important. For instance, by strengthening the demand side with quality monitoring and clear-cut net neutrality rules that guarantee unhindered access to new services. The demand side is not sufficiently regarded, given its importance for the further development of the sector. So, in the same way as the sector-specific regulation or the classical sector-specific regulation will go down, in the same way regulators could increase their footprint in offering such services like monitoring, net neutrality tests, etc. In innovation policies, we should concentrate on harmonization and on creating a lively environment for startups. Startups which I would regard as very, very important for the industrial development. We need, for instance, harmonized copyright rules, a new regime aligned with the digital era and not with the analog era, with the book printing era, to ease spreading new services such as Spotify, which is currently available only in 18 out of 28 member states. The same is true for data protection and privacy standards. Firms should be able to operate under the same conditions throughout Europe. We can even exploit a unique selling proposition here in Europe. Given recent discussions about espionage, we should utilize the advantage that some European countries have in this area with higher privacy standards and the citizens' attitude to privacy as a valuable and important asset. And we should help startups to take their first steps and grow into the Googles and Facebooks of tomorrow. We should ease the foundation of new businesses by creating new legal forms for Europe-wide operations, the same way as there is a Europe SE, should be a kind of smaller Europe SE for startups, and we should build clusters of excellence where ideas can be established and grow into new business models. So it's all about investment. Finally, we need investment policies that help bridging the investment gap in Europe. We need a compensation for the Connecting Europe facility, which cannot deliver the planned amount due to budget constraints. Overall, we need to empty treasuries make it more difficult for public institutions to finance growth when in sparsely populated areas. However, the public may still engage in supporting these investments. We could set incentives for pension funds to increase their engagement in telecommunication infrastructure by creating pension fund partnership, as it has been done in the United Kingdom. European institutions, such as the European Investment Bank, can help investors by establishing new European financing facilities like the Maurer fund has been established for the financing of the renewables in the energy sector. However, we are currently only at the beginning of a long process. With our ideas in mind, we need to take the next step from inspiration to realization. We are missing complete steps to trigger the virtuous circle. After the current negotiations with the European Parliament and the European Council, we will see if the telecom single market initiative by the European Commission will help to reach its goal for the regulation. We will, however, certainly need similar initiatives as well for innovation and investment policies, and we need to develop a long-term strategic perspective for Europe, which is very, very badly missing. To close, I think that the virtuous circle can be a silver bullet for the problems we are facing now, and I thank you very much for your attention. Hope we can discuss more of the things further in the course of the discussion. Thank you.
Wonderful. Thank you, and impeccable timekeeping, which is hugely appreciated. We're going to the next, last speaker of the panel. Sverre, do you want to stand? And that should leave us with some time for discussions, which is great. So please.
Okay, we have some technical challenges here, so I can start. My name is Holt-Francati. I'm happy to be invited to this conference and talk about how to foster investment in the European telco sector. And before starting to do that, I think it has been debated already today about the network operators, internet, etc. And I think it's important actually to be clear what kind of sector we are in, because I'm not sure if I'm a telecom operator anymore. At least 75% of our operations are mobile. But what we are doing is to build and operate infrastructure, and probably even more importantly, we are selling connectivity. That's the main purpose for us, to sell connectivity. And from that perspective, I think it's quite interesting to see that in Oslo, where I live, an average user spends approximately 300 kroner a month on connectivity, but actually spend 500 kroner on coffee. So I think that shows very clearly the potential that is in this industry, because if you ask the customer if you would give away one of these two services, connectivity or coffee, for 1 week, I'm sure what 90% of the population will have answered, that is not coffee. I will talk about two things. I will give our perspective on the single market package, and then I will present and discuss what I see as our wish list to the package, or maybe not the package, but something else. What I find quite interesting today is that the roaming has not been very high on the agenda. So before I go into the package, I will just say 2 words about roaming, because the slogan is roam like at home. And I think in Telenor we can say we are ready to roam like at home, but we're not quite sure how to get there. There are 2 challenges. One challenge is the timeline, and which we are not fully aware of what will be. And the second issue is what will happen in between from now until 2016 or 17 on the revenue will be. I'm not thinking about both the business models that will be in between and also the wholesale rates that will apply. So I think that is important both for us as investors in infrastructure, but also for the alternative roaming providers to have some clarity on that. But we are ready. Just to say a few words about Telenor. We have 90% of our customers in Asia, but 50% of the revenue are still from Europe. Tells that still the customer in Europe has some willingness to pay for our services. We are mainly focusing on the Nordic and the Central and Eastern Europe. We are the operator in Hungary. And it's quite interesting to see these 7 markets because they have different characteristics. They have different market structure, they have different prices, they have different regulations, and in general, everything is different. So I think creating a single market with this approach is quite a huge step to take. Having said that, I think it's one of the main challenges for us as investors is to get the governments around to understand what is really creating investments. And I think the tendency we see with taxation is a move in the wrong direction. But I'm happy to see, for instance, here in Hungary that we have recently established a strong strategic partnership, which I hope will bear fruits going forward. Then, to some of the mega trends, which I think which is already covered, so I will not go so much into them. But I think it's a good question in the bottom there. Can the European Commission proposal address these trends and promote investments? And as you will see in this slide, the answer is probably no, because when we look into the package that has been presented from the Commission side, we have done a very thorough assessment of all of the elements there. And if we start on the top, the single authorization, I don't think that matters very much to us. Probably 0.1% or something like that. So it doesn't have any big impact. Coordination of spectrum use, yes. I think that could have really a positive impact on our business. But it depends on what kind of elements that will be covered and how it will be implemented. European access products. Being an access provider in Norway, access seeker in some other countries, we are on both sides. I don't see that either as a big impact, but this service quality product, which should be for the business segment, could have some potential. Then, of course, roaming, we will lose money by implementing the proposal from the Commission. But I think our perspective is that this is a lost battle, which we will not try to fight. So we'll just implement the roaming concept as soon as possible. Net neutrality. I think what the industry is screaming for here is clarity, because there are big potential in many new services, but then we need to know what it really means. And I think the proposal is a step in the right direction, but not a big one, but it's a positive. And finally, consumer protection. There we have a lot of issues. Some of them are not that important. I think the most important thing from a business perspective is the lock-in period. And of course, reduced lock-in period could mean increased churn. But this can differ from country to country. So summing up, we don't think the proposal from the Commission in general will support the industry. We have 2 elements which we think are positive, the coordination of spectrum and net neutrality. We need to have something more, something different. And I think it has all been covered earlier today, so I'll just repeat it and go more into detail. Market structure, especially in market consolidation, is very important. The level playing field with the OTT players, and deregulation, and then especially on the fixed side. Spectrum coordination, I think moving to the total liberalized area of spectrum is a big opportunity for all European countries. The challenge is, of course, that this has to be done in a coordinated manner, and it has to be done or implemented in the same manner in all countries. We see a lot of opportunities in this, for instance, through longer license duration, but also, hopefully, a more harmonized rule when it comes to auction. So from an investor perspective, this will give much more predictability, and spectrum is so important for the mobile side. We think this is a good and promising proposal. Net neutrality, I already touched upon. I think both for specialized services and traffic management, there are some potential, but especially from the specialized services, we see a lot of potential if we know that we are allowed to deliver some services to the customers, which we are not sure if we are allowed to today. And I think this will be a benefit also to the customer. I think this will increase the customer experience. Level playing field, this is a very big area, and I think there are different dimensions to it. I think the first wave here is to make sure that the e-com specific provisions are reviewed, meaning that Google, Facebook, Apple, etc. Should have the same obligations like we have in areas like data retention, privacy, security. And then in addition, there's another dimension, the horizontal review, meaning that outside of the telecom or digital space, everyone that are competing in this area should, of course, pay VAT and tax. And that's actually very important for us because we are losing out by losing customer control because some of our competitors, they don't have to pay this. So we think also for the sake of the financial of the states, this is very important. Then to an element that has been discussed by many speakers today, namely market structure. We think this is very important, not because we think it's a big potential in European players, but because we think it's a big potential in more scale when it comes to national competition. We see that the focus is going away from infrastructure competition more to service and competition on content. And if you live in an urban area today, you have very many access alternatives. And I don't think it's needed to have that many operators in each market. So we propose to make it very simple, of course too simplistic, but still. We think that it could be a general rule that small European countries with less than 10 million inhabitants should be necessary to have more than 2 country-wide networks and 3 mobile network operators, meaning that some infrastructure sharing could happen. And then for countries with more than 10 million inhabitants, there are not that many of them in Europe, but there are some. We think 3 country-wide networks and 4 mobile network operators should be more than sufficient. And then, of course, there are also some elements which has been touched upon earlier by looking into much more the dynamic efficiency perspective rather than static. We need to support investment and not only to cut the price in the short run. And I think also how the merger rules and the guidelines and the tests are happening today could be reviewed. And then in the next step, when such a consolidation has happened, then you could maybe see some pan-European players, but we're not sure if there are that big potential in pan-European telecom operators. Finally, which is out of the scope and more, I think, into the review of the just such. We think that when we are looking into the S&P regulation, we should see fewer product markets. And the reason for that is that the S&P list of relevant markets is outdated. It's not, it's technological focused, meaning that we should rather have a technology neutral perspective to it. Today we often see 3 mobile networks, we see a fixed fiber, fixed copper, we see cable networks, and I think with a strict regulation on a fixed sector, some regulation on mobile, and more or less none on cable, this is not a level playing field either. So I think we should move into an era where we are focusing on technology neutrality when it comes to relevant markets. And the same goes also for the geographical market. Today, it's, the focus is a country, but I think we could look into regions, or actually cities, it could be. Today in Norway, for instance, we have approximately 27% of the fiber market, but still we are the only one that will be regulated in the market. And I think that's not the right approach, when we also see that all the time the infrastructure are available. Finally, we also think that the remedies could be re-evaluated, and especially the toughest remedy, price regulation, which more or less always means cost orientation or cost-based delivery prices, which I don't think is very supportive to the industry going forward. We proposed earlier this year in the consultation that the Commission had on the relevant market that, for instance, there should be one MTR in Europe for all countries, just like we have in Norway. That could, for instance, be 1 euro cent. And I think that kind of simplification is a much better and much more efficient way of regulating, instead of having very sophisticated models and processes, which we have today. If you look into delivery models, probably very few of the regulators understand them, and none of the industry players either. It's mostly the consultants that all of us are hiring to sit and discuss in the different forums that are benefiting from this. So we don't see a very big benefit for society or for the customer from that. So simplification is very important, and I think that will also give a higher return on the commercial side. So summing up, we don't see that the package will deliver in the short run, and we don't think it will be of benefit to any, not the operators, not the investors, and not the customers. We think the Commission should take one step back, look at the big picture, and try to cover also areas like level playing field, market structure, and deregulation. And finally, there are some areas where something needs to be done before the telephone review in 2016. So please continue to with a good effort on spectrum and on net neutrality. Thank you.
Thank you, Sverre. So some interesting feedback there on your connected content package. Robert, do you want to have a break and reply as well on Readiness?
Briefly, I would say, there's a Chinese saying which says the words cook no rice, and as I tried to say in my introductory remarks, the key thing, I think, in a discussion like this afternoon is everybody has to promise themselves they feed whatever their thoughts are at the end of it to the legislators, and saying to the Commission, please step back relevant. The Commission has acted and now the Parliament and the Council are going to decide. I think what I was trying to say, second point, is the bigger picture somehow we get that. And if you look at the deregulation elements, I think the pipeline's going to fit some of those aspects too. So relevant markets, we're working on it. And on stuff like data protection, it's before the Parliament and Council. Privacy, actually, privacy there is, in our view, a level playing field. Whether the multinational players accept that jurisdiction is a second question. But if you look at what the data protection supervisors have done with cases like Facebook, I think we're making progress in effectively exercising the jurisdiction we have. On issues like tax, absolutely, and I think that one of the big gains from the European Council was that for the first time we begin to look at tax together as a European industrial strategy issue. But it needs a lot of support from market operators because it's politically very sensitive to talk about it together. And finally, on cybersecurity, that's exactly the same problem. The Commission, we don't just get this sort of criticism in the telecom regulatory sphere. The Commission is facing an uphill struggle getting member states to accept that a collective effort on cybersecurity would be a good thing for Europe as well. So I don't think the bigger picture is somehow ignored, and that's what I meant with my little triangle at the beginning. We're not here pretending, I think any of us, that the thing we're focusing on in this conference is the answer. Otherwise we wouldn't deserve even our diminishing salaries. I think the key thing is to see how it fits together. But I don't believe either that we can put the genie back in the bottle, or that we're missing in the range of issues that the Parliament's working on any particular point. The one issue I think where I would disagree, and I may be just a maverick here, is the notion that several raised that maybe the OTTs need regulating. I mean, firstly, it's very curious to have a discussion where operators say, in this sort of sphere, A, stop regulating us, and B, regulate other people. I mean, this is the sort of 1984 thing, don't do it to me, do it to her. But secondly, it's part of success in technology-led innovation to be over the top. If telco operators can be over the top for e-health, for mobile payments, there will be other sectors going to their regulators saying, please regulate them, stop them doing it. And I'll be saying, no. Mobile banking run by Telenor would be a good thing for the world. So that means we have to sort of take what we want to dish out.
We've got a couple of minutes, and then we'll do give you your right to reply as well. Bearing in mind, Robert will be on the next panel as well. So if you have, if you want to probe Robert, we can do that in the next one because we'll have more time for discussion as well. So, any burning questions for the rest of the panel that you want to pick up, or in the meantime, think about
just
that.
Give a comment to what Robert said, especially on the OTT side, because we are actually running OTT service provider ourselves called Comoyo, and we thought that was quite easy, but it was not, because we are an e-com provider. And if you are an e-com provider, you can't in a way start on the business side and say that that's not a part of your responsibility, because if you are an e-com provider and you have S&P obligations and you have all the obligations you have as an e-com provider, you cannot on the same side see that you are an OTT player and not an e-com provider. That's what we have seen in the Norwegian and Swedish and Danish legislation. So I don't think that's correct, and I think then you are more into the details. What is the challenge about the single market as such? Because if you start acting like you unique and good business model and try to implement that in different markets, you see that it's very different from country to country. So I think, but my point was that it's not that easy, at least as long as you have your legacy in the e-com side, and it's not that easy to step out of the box and provide something else and then forget about that where you come from.
I'm not the expert, and there may be regulators who regulate Telenor in the room, but it seems to me clear that it would be inappropriate if people say you quack like a duck, so you're always a duck. I mean, that's not, in my view, the appropriate way to regulate if you have sectoral regulations. And we do face problems across Europe in applying siloed regulation to, for example, bundles of content and e-com. So I think this is genuinely something we have to fix. I think what I'm saying is I would rather fix it by unleashing everybody's right to be over the top everywhere, rather than by trying to go after the well-known short list of American multinationals and try and make them e-com regulated. Because A, you'll fail, and B, it's not the way I want Europe to be.
I guess also getting data retention rules adopted these days might be a bit more tricky than after 9/11. But do we have any questions for the panel, or are we burning for coffee? Expensive coffee, apparently. Okay, 1, 2, 3, gone. Okay, we'll break for I'd say 10-12 minutes, so that we're almost back on track on time. But let's try to keep it to a decent time, and meet back here at 10 past.